Hey, folks, my guest today is David Boskovic. He's the CEO and co founder of Flatfile, the hypergrowth platform on a mission to accelerate human innovation by automating and securing data exchange. Now, I love his origin story here. He first built Flatfile in 2018 after redesigning, and a bunch of you guys who are engineers, you're going to laugh at this, redesigning that annoying CSV importer for the millionth time that the founder or your product people go, we need a better importer. Dashes are messing it up, or a question mark is messing it up, or it's a euro sign instead of a dollar sign, and it broke the whole importer. He basically built it over and over and said, you know what, I got to fix this. So since then, Flatfile has completed over 26 billion data mapping decisions for companies like Sage, CBRE, Square, HubSpot, and ClickUp. The last two, Brian Halligan and Zeb Evans, both being recent guests on the show. David, are you ready to take us to the top?
Let's go.
All right. What was the company, by the way, where you were rebuilding these importers over and over again?
It wasn't so much all rebuilding it at one company, but just over 15 years in SaaS, having built it at each company over and over again. And I've worked at a number of companies, consulted at companies over my career, and almost every time, right? You're building, SaaS is building an empty box product that provides some value to customers. It requires their customers to bring data. You build a CRM, useless until the customer brings their data. You build a visitor management system, which is the company I was working at before Flatfile, Envoy. And you need your customers to bring lists of employees and daily lists of visitors coming to their building. And you realize that by and far, like software and SaaS products have to solve this data import, data onboarding problem. And early on, you might solve it with like a simple, like, here's a CSV template, fill this out exactly, upload it, and we hope it works, right? But eventually, and this, sort of where it came to a head at Envoy, once again, sort of for me, was we had customers that were sending their teams in early, an hour every day, to manually enter in the visitors that were coming to their offices because we couldn't accept the format of the file that was coming from their ancient building management system. And you see this across almost sort of every industry, whether it's supply chain, healthcare, et cetera. People are coming from legacy systems. There's no cute API that you can connect to get your data automatically synchronizing via Zapier in when you're coming from a system that was built 20, 30 years ago. And that's where the majority of SaaS innovation is happening, right? We're solving these problems that maybe last were innovated on multiple decades ago. And that's this incredible open market, but that data is coming from vastly CSV files.
And David, there's a lot of my listeners that are stuck in corporate and they say, Nathan, I'm trying to spin out. I have an idea. I want to spin it out. How did you get the conviction to quit the full-time gig and say, this problem is big enough? I'm eating my own dog food, but it's big enough to build a whole company around and really launch Flatfile in 2018.
Yeah, so I've been a founder a couple of times. I started my first tech company in high school, actually. We built banking software for large banks. It was custom
You're an
software.
engineer by trade then.
I born an engineer.
Okay.
Yeah. And then there was a huge opportunity to learn the enterprise side of things. Then I built a SaaS CRM for nonprofits, which was, understanding much more of the SaaS world. And then, over the years working at different startups. So starting a company wasn't the part that was hard for me particularly, but I've had failed startups before. I've spent all of my money and then lost it and shut down startups before. I didn't want to do that.
No,
again.
David, hold on. Quantify it. Help us feel that pain. You spent like $100,000 or 10 grand.
Oh no! So my first startup, walked away with a handy 7 figures, and then burned that on my second startup. The ebb and flow of things. So I was intent not to sort of just like get super excited about this problem and go like jump ship. So I actually it started as a passion project. I wasn't sure if it was going to be open source. I had a friend who was looking for work, so I hired him to build it out. And then I stuck it up on Google Ads, and I think it's been like $50 a week. And I was like, here's 3 keywords that I'm pretty sure everybody who's looking for this is searching for. And
what were they?
I swear, I have never seen product market fit like that on an idea.
What were they, David?
Well, for us, it was like CSV React, CSV Angular, CSV, anything that was like, I'm building an app and I need CSV support for it. And that was like our core set of like initial.
So these keywords. Ads were before you had the product built.
Oh yeah, this was like side project territory.
Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your FounderPath dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right, so the teal is what a VC would pay, yellow is what private equity, and red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise, they sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of FounderPath, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here, and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview. So what did you see in the click-through rates on the Google's ads where you said, oh, product market fit here, it's worth me to write the code?
The click-through rates were less of the validating point here. More of the validating point was almost every person who was clicking through and sort of signing up was actually activating, right? They were playing with it, they were embedding it in their app, or they were, coming in sort of.
Wait, but I thought the code wasn't built yet. You had an MVP then already.
Oh, this was an MVP. This was a side project, like open source, almost SDK version of this thing. Yep.
I see.
You could get it and you could install it. What was the product? There were a couple of key product market fit moments for me. One was a product manager from Capital One signed up and was like, hey, we want to talk to you about this product. We really need it. And they were trying to build a bulk ACH payment feature where you could upload a list of invoices and pay them. And they're like, this is exactly what we're trying to build. And it expanded my mind because I was like, wait, I'm building this for all these SaaS companies that I know and love. But I just realized, wow, an enterprise like Bank of America also is trying to build a little SaaS feature. And then when you think about this, whether you're CBRE or whether you're a large multinational bank, you have hundreds of internal tools that have more users than the average billion-dollar SaaS product, right? CBRE has internal tools with 50,000 brokers using it every day, right? You're just like, that's insane, right? That's the opportunity for these enterprise companies to build these internal tools, and they reflect SaaS.
And you're seeing huge. Net dollar retention dollar signs flashing your eyeballs, right? You start with one.
Early on, I'm just like, if absolutely right. If Bank of America needed this, then there's going to be a huge potential. Obviously, it's a side project, not even incorporated. We didn't work with Bank of America at the time, but it was an incredible validation of the market size.
Okay, so you officially get going in 2018 now. But before I'm going to go back to your origin story here in a second, but I want to fast forward to today for a second.
Yeah,
people that are listening right now going, I want this thing. How cheap is it to get started? I assume you have a free plan, and if confirm if that's true or not. And then secondly, of your paying customers, what's the average customer paying per year to use this technology today?
Yeah. So we have a startup program for small companies. We just give you the product for free. We don't try to monetize at the low end of the market. Because that's just, we're nickeling and diming. We want to align sort of our price point with a growing company that's seeing value. And that's where we sort of start our pricing. Our average ACV is at the we have two segments that put the enterprise segment aside, but at the sort of mid market commercial segment, it's about $10,000-$15,000.
Okay.
So that's the sort of average amount customers are paying us there. At the high
Per
end of the
year.
market, this
Per
goes
year,
well.
right?
Yeah, per year. Yeah, per
Yep.
year. At the high end of the market, this goes well into the few hundred thousands. But that's where there's millions of users and enterprise customers.
So just real quick, don't obviously name the account, but you have an account,
Yeah.
it sounds like that's paying maybe $300,000-$400,000 per year. Those big accounts, is it because just of number of data validated rows, or what's the utility metric you're upselling against?
Yeah, we generally, depending on the type of use case, but let's go sort of the throughway use case of onboarding. How many customers are getting into your system? That is a high ROI point. We have two products, right? One that's a button you embed in your product. And in that case, it's usually like a PLG scenario, right? Early on, like ClickUp was a customer when they were just six employees. And we've been with them as they've grown as a
Wow,
business.
that's a big, that's expanded a lot.
Right, exactly right. But we've seen, many of those ClickUp customers, the first thing they do when they buy ClickUp is, oh, I'd like to upload a list of tests and see how this works. And so you get in that sort of PLG motion, right? That getting that data into the box is pretty important. But on the flip side, right, if you're a large sort of enterprise SaaS company like Workday, you're spending 7 months onboarding each customer, but a lot of that is still emailing spreadsheets back and forth. So we serve both of those. And as you can imagine, right, the ROI per customer changes significantly between those scenarios. So we generally anchor our economics around the customers that are onboarding or using the system. So seat-based.
And so what's the breakdown between, and if you look at your whole revenue pie is 100%, what percent would you say is mid-market versus enterprise?
We are still largely mid-market. From a revenue percentage, about 20% of our revenue is full enterprise. And then, for a lot of our highest value customers oftentimes are not enterprise themselves, but are SaaS companies serving enterprise. And to help this make a little more sense, right? If you might only be 50 people, but if you're spending $50,000 onboarding each of your enterprise customers, this is going to have a lot of value for each of those transactions, right? So we'll save you the vast majority of that time, creating, opportunity for like better gross margin, et cetera. So sometimes these small companies are actually some of the highest value customers to us because we're delivering so much ROI there.
That makes tons of sense. Okay, so now let's go back to the customer number one. Yeah, when did you decide, okay, this is bigger than an open source SDK. I'm going to put up a paywall. I'm going to close my first customer.
So this was a super intense time at Envoy. I almost completely left it alone for 6 months. We were launching our product and this was just running in the background. People were signing up, implementing it in their apps. Wasn't paying a lot of attention. Coming around the December of 2017, 2018, I have to remember this now. I went back and looked at the data and there are 20 companies that had added this widget to their application. I was like, oh, this is interesting. It's actually being used.
Wait, and against how many downloads? I want to get the conversion rate of activated. So how many total downloads? Okay.
There's against, I think we had about 100. So about 20% of the people that had signed up with GitHub, set up trials, etc., had set up accounts. Yeah, super good early on. And this is highly targeted, right? 5 very specific keywords. It's not we're not pretending that that's scaled. But of those 20 customers, they had done already 20,000 onboardings across them.
Wow.
And I went and looked at what we had been able to observe in that. And there were hundreds of thousands of mapping decisions that we had tracked and hundreds of thousands of data correction decisions across these customers. And I had this light bulb moment. I went when I tried to convince my co-founder to join me. I was like, this is the Tesla opportunity of data. At no point in history has an ETL product had this level of volume of access to subject matter experts. If we were a traditional ETL product, our first 20
define ETL just for everyone on
extract, transform, load. This is traditional world of taking data from one system into another. But traditional ETL product would have had 20 data engineers, and that would have been your pilot customer group. Instead, because we were embedded in these products, we had 20,000 subject matter experts across different industries going through and labeling data and correcting it. And I realized that we had solved the access problem, the biggest access problem, the subject matter expert training, in order to build an automation of the entire flow. So fast forward 3 years now, with the billions of decisions we've observed across our customers, we can automate 97% of the decisions in the data exchange process. So
Mm.
that's where I went and pitched our pre-seed investors on. It's just like the wedge market side of a widget you can add to your SaaS application. The real opportunity here is the amount of training that we can get out of each of these decisions as each person onboards through Flatfile.
So this was in 2018, 100
Yeah.
downloads, 20 activated, and across those 20
Mm-hmm.
activated, 20,000 onboardings, which you're learning every time someone trains that one
Yeah.
onboarding. It's a lot of
Yeah.
learning. What is that? What are those exact same numbers today?
We see about 2 million onboardings a year now. So significantly different and across about 500 SaaS customers.
Wow. And do you still measure like open source SDK downloads?
We definitely still track that. That's not a metric though. That like the primary metric for us is companies that sign up and then sort of go through this onboarding process with us.
Okay. Okay. Fair enough.
Yeah.
So the SDK is like your top of funnel free marketing, but you just you don't care about conversion rate from SDK downloaded to 500 customers. You just care about customer signed up. Now, how do we get them onboarded?
Correct. Yeah. And if you're a developer who's just using the SDK, like you're not, we don't even sort of put you through any sort of sales or marketing pipeline. Like developers, your goal here is to understand the product, prove that it's going to be valuable for you, and then advocate to your VP of engineering or VP of product who's going to make the buying decision.
Yep. This is amazing. Okay. So again, I don't want to bury the lead here. Can we take 500 customers times 15,000 minimum ACV? That would put you guys north of 8 million in ARR today, right?
Definitely putting me on the spot on a revenue metric. So we grew our first year. We grew from 0 to 1 million, which is just incredible journey.
That's
then we went from
2018,
a million, 2019, 0 to 1 million. The company starts early 2019, 2020. Dang. 20. Then we went 1 million. No, we're actually like we're a year off here. So 2020, 0 to 1 million. 2019. Sorry, 2021, last year, 1 million to just shy of 4. And this year, we're shooting for a 2 to 3x. So tracking in that range. I'm not going to be specific about where we're at right now, but you're thinking about it right.
That's awesome. I mean, look, anytime someone has customers that, you start off charging $1,000 a month and you have customers already, even if it's just a handful of 2 or 3 paying $300,000 per year, like there's a clear expansion motion here. Explain me from your org chart and talent perspective, how you're investing in that expansion. Do you give customer success reps an NDR target, for example?
Yeah. So there's 2 ways that we expand with customers. Vertically, where they're growing and we're growing with them, right? Like if you're ClickUp and you start with 5 people and you have a few hundred customers and now many more than a few hundred customers, like that's an opportunity for us to expand.
Just so you guys know, Zeb came on the show and said they broke 80 million bucks in ARR and that they were going to break 200 million in ARR this year, right? Zeb's a sales guy, so I don't know if it'll actually do that this year.
He can show his numbers.
Yeah.
I love Zeb. But yeah, it's incredible to grow along with us, and that's where we really care about sort of coming alongside early. And we don't really try to monetize when you're a small company and you're just a few people. We know that if you're going to grow and we're going to help you grow, there's an opportunity to grow with you. Then there's the horizontal expansion. This is where success starts mattering a lot more because it's use case number 1 and then use case number 2.
Well, what are those? What's 1, 2, 3?
So oftentimes with our customers, there's a starting use case that's really simple. It's we need an import contacts button in our application or something like that. Import inventory, import something, right? And then there's more places in that product where they may want to import. So that's an opportunity to expand across there. But almost every SaaS company starts opening up an enterprise motion and they start dedicating, months to onboarding these customers. And that process oftentimes has 50, 100 plus hours of services to go through that customer's data, get it into the system. So that's where we are able to sort of have both the like PLG sort of button in your application and an expansion motion as you start opening up these enterprise deals. And that allows us to have those conversations to track with their business model and make sure that we're sort of serving additional use cases across the org. With the rollout of what we're codenaming X here, is a preview of what's coming in the next few weeks. We're actually taking all of the fundamental building blocks that has enabled these 2 successful products that our customers use and opening them up to our customers to build whatever they want on top of that. So all of the core APIs, all of the training engines, yours as building blocks. This will open up another set of use cases where customers oftentimes don't have, their use case doesn't fit that sort of button or that workspace idea exactly, but they have an incredible set of problems where they're trying to exchange data at the edge of the business. And this is where our platform is going to come in, unblocking those customers.
So guys, check this out. Obviously, you can go sign up for Flatfile today at nathanlatka.com/flatfile. I'll get you that link in the show notes. There's a good product tease from David. But David, talk to me about economically how you built the business. So you've chosen not to bootstrap. Walk me through when was the first round closed?
First round was closed in mid 2019, so around June 2019. I quit my job sort of entering that year, so January, February, March, raising, got the round closed going into. That was the first time I had ever fundraised myself.
What did you raise in that pre-seed?
We did a $2 million pre-seed led by A4 Capital, dedicated pre-seed fund. Absolutely love the team there.
Fair. And most folks in their pre-seed back in 2019, I mean, you're selling, it's dilutive. I mean, you're selling 15 to 20% of the business on average. Yeah. Were you sort of in that average range?
Yes, definitely.
Okay. So that's like sort of a $6 to $10 million post-money valuation way back then.
Yeah.
Okay. And then what did you do?
Then we grew for about 7 months. We got preempted, did a 7.6 seed with 2 Sigma. Then we got preempted about 7 months.
That was 2020?
Again. That was entering 2020. Yeah.
Okay.
Entering the pandemic, new territory. Got preempted again in later that year for our Series A, which turned into a $35 million Series A, led by Scale Ventures. But because both of these are preemptive, we amassed capital in a way that gave us an incredible amount of runway. And we our focus was not to try and burn that capital as quickly as we could. Focus was to make sure that we had plenty of runway and had an opportunity to innovate as much as we needed to while creating a category. And this is maybe the one thing that I think gets lost in on a lot of sort of business models is category creation is incredibly expensive. Because unlike innovating with a new CRM where you can all of your sort of education your customers is clearly done and you get to be better, right? You get to differentiate yourself. Telling people hey, this is something that you've exerted services on or spreadsheet templates for before, and there's now a product with this. The alternative to Flatfile is not another product. It's not an ETL system. It's something you built yourself or it's manual services. And it has been an interesting.
Well, so what are you calling your space? HubSpot would be inbound marketing. What is it for Flatfile?
Like data onboarding for us. Yeah. So this is a category that we created, and it's a category we've been able to build and own. But that is incredibly expensive from a brand creation perspective, content, and customer education side. And as we build this company, and there's more and more sort of ankle biters entering the market, they get the benefit from that sort of category creation a bit. But that's, I think, where the funding has been the most useful is in plowing through that forest and making sure that we are able to clear the way and create that category for the market.
Yeah. I'm just looking at I'm not going to name your competitors on your show, but when I do data onboarding in Google, I'm like, okay, they're doing something right. When you have 4 competitors, a minimum of 4 competitors paying for ad placement against that keyword.
Oh, yeah. You just searched it. Yeah, there you go.
Yeah. So Series A closed last year, the 35 million.
Yep.
Okay. And then is that done? Then you're done funding wise?
Yeah. Then we were done funding wise until today, where we announced a $50 million Series B. And again, opportunistic. We still had an enormous amount of capital entering this year. But, looking at headwinds and looking at our incredible growth last year, well into the top decile, there's an opportunity for us to make sure that we had enough capital to continue building the company that we wanted to build and potentially sort of innovate even.
David, you cut out right when you said the number. Did you say 50 million or 15 million?
50 million. So collectively, we've come up to about 100 million total in funding.
Yeah. Okay, so hold on, because I want to give you a chance to sort of defend yourself in front of my audience, because they're immediately going to take the revenue we just talked about, which is under 8 million, and 100 million in funding. Yeah. How do you, as a founder, I think they'll agree with you, it's good to have a war chest right now in this economy, but also this is expensive for me from a dilution perspective, unless you're just really good at getting super high valuations because the story you're telling. But how do you think about that balance?
I think it's a massive market, and I think the willingness to sort of accept capital has to come alongside with the size of the market. This is something that we believe is one of the largest addressable markets in the world. Every single company has to exchange data, and this doesn't matter if you're applying for a bank loan, you're a home builder placing orders at Home Depot, or you're a SaaS company. Everybody has to exchange data because that's just how business works now. So when we look at this sort of market opportunity for us, there's no back pressure saying, hey, you're not going to be able to fill these shoes, right? And then the question just becomes how quickly. I think in a different market where your addressable market is lower, there's a lot of discipline that should be exerted and thinking about the capital. Um, when it comes to where we are right now in the market, though, everything's shifted a bit, right? Last year, the bar for valuations and bar for getting more capital was very different than it is right now.
Well,
And I
David,
think,
talk about that. Talk about that difference for a second. So in 2021, you cared about
yeah,
metric X. Today, you care about
yeah,
metric Y.
by and far through 2020, 2021, right? This is going to be top line growth. At that point, right? Like, you talk to your board, you talk to investors, nobody's paying an enormous amount of attention to the cost of acquiring these customers. And especially in a category creating business, that's not the most concerning thing, right? Amassing sort of market presence and top line revenue, especially with great NDR, right, is very valuable. In this
Fast forward
world,
to
though,
today. You just closed 50 million Series B. What's
very
important
different.
today?
We care almost entirely about the fundamental economics of the business. Like, I will pass on the most aggressive top line growth in exchange for better fundamentals, because at some
Like
point
what?
in the
Like
next
what? Name
18,
some
20 months,
fundamentals, some metrics.
CAC primarily, payback period primarily, right? These things that, like, are relevant to how much you're charging for the
So what do
product,
you want your
etc.
payback period to be under right now in today's market?
I would like payback period under a year. I think every SaaS founder would.
Okay.
We are not under a year, and I think that's traditional with these sort of like top
What are you
high
at
growth
now?
companies. But you're going to press me on that point.
Yeah.
Not under a year. So
But are you
it
under
fluctuates,
2 years, would you say?
almost always. Again, it
Okay.
fluctuates quarter over quarter, month over month, but we're
What
almost
changes
always.
though do you
Yeah.
make though in the business to try and get your money back faster, your CAC back faster?
Yeah. So this goes, reach for more tools across marketing and the revenue orgs. I think there's a lot of simple, sort of expensive tools we can use to generate pipeline. But what we're doing now is building out better sophisticated content, making sure that, like, where we are spending money on advertising, it's more targeted, and the audiences that we're marketing on, I think our team works with you guys, are specifically our ICP, right? Rather
Yeah,
than
I
sort of
have to.
broad
I
sweeping
should
spends.
disclose that, guys. Flatfile pays us a lot of money. We try and do a good job getting them good leads. But you guys run the metrics on that, and
Yeah.
you go, it's profitable or it's not, right?
Right, exactly. So a lot more discipline around sort of where we're deploying capital, and also just more diligence on the quality of our pipeline rather than the volume.
Yeah.
And I think that's where a lot of we've seen like an almost 100% optimization over the last 2 quarters where we've been doing that. So, like, really bringing things back into the range that we're looking for as a
So
business.
David, just to be clear,
Yeah.
for a mid-market customer paying $15,000 a year, historically, last year, you might be willing to pay 2x that for a 2-year payback, maybe 30K to get that user. Today, though, you're really trying to figure out how to get that, how to get that same user for 20 grand or even 15K.
Yeah, or quite a bit less. And marketing is not the only contribution to CAC. I think at no point is marketing ever over the contract value of the business. But with a growing revenue org and success org, you've got a lot more than your marketing spend purely. So,
Yeah.
marketing, you might have a few $1,000s of marketing contribution to a deal, but by the time you stack up your sales team and your success team to get everybody implemented, now you start seeing, like, the whole picture of CAC. And a
Fully
lot of this
weighted
is
CAC
front
there,
loaded,
yeah.
right? Yeah, exactly.
Interesting. Real quick before we wrap up, what net dollar retention today? Can you give us a peek into that? Are you the 110, 120 range yet or no?
Yeah, well over 120. And
Oh,
we've
wow.
always been as a business. Our customers love the product and expand regularly. What we're excited to see now with more of a consumption model is it going significantly above that. So
Yeah.
really excited to see customers sort of starting with a smaller contract size and growing over time, rather than necessarily prepaying and, like, loading that all up front.
And what's your team size today? How many full time?
We are just shy 80 people full time. So coming up here on the north side of that sort of early Series B territory.
Yeah. So that's, can you grow past 8, 9, 10 million in ARR and not hire more? Like, can you do more with less in these uncertain market conditions? Your revenue per employee right now is about around 80,000, 90,000. Can you get that up to like 110, 120, you think?
Yeah, absolutely. I think there's areas of the org that have been front loaded, right? Like the revenue org, like, you have to build that team up, and that takes a while for all of that to be producing value, especially success, right? Success where there's a lot of money there, but, like, takes a while to come up on renewals and really see those expansions paying out. So I think at this point, right, we have a number of orgs that are performing well and can absolutely continue performing before they need to scale meaningfully further. And where we are scaling is on our build side of the house, where we can continue sort of increasing the contract value by giving our customers more of the thing that they need.
All right. We got to wrap up here real quick. 50 million all balance sheet, or was there any secondary in there?
All balance sheet.
Oh wow. I was expecting you to smirk and say I can't answer it, in which I would have said there was secondary, but that was all balance sheet. Wow. Okay. Cool. Let's wrap up here with the famous five. Number one, favorite business book.
Favorite business book. This I'll say this is not necessarily a business book, but this book is it it has influenced me more in my professional life than I think any other book. It's this book called Die Empty. Um, if you haven't read it, it's the simple thesis is our goal in life is to sort of not escape the terminal nature of life, but to make sure that as we get through our life, we're giving as much as we have to the world and to the things that we're doing. This book has influenced almost every sort of way I think about business and think about the process of innovating. So that's my favorite book. I'll name it as my favorite business book.
And your partner's running a ranch. Does she apply the same theory to everything ranch related as well?
I mean,
You
I think
optimize
we
the
both could not
cows
be more
and
different people.
fair enough. All right, that's the book. Number two, is there a founder you're following or studying? Just one you really respect?
I think right now there's the founders that are most interesting to me are founders that have been through a number of different market conditions and have figured out the sort of the balances of each one of those sort of eras for their business. Because in a sort of a bull market, you do need to think about the success of your business in terms of top line growth. And
Yep.
in more of a bear market, you have to shift that, and that's a complete sort of mental model shift. So I think there's a couple of companies that have done that well. I think we saw DocuSign go through a number of eras as a company. We've seen some of the more sort of mature growth companies have been able to go through a lot of that. So I think the founders I'm sort of paying attention to and are my advisors fit in that category.
Makes a lot of sense. Number three, besides your own, what's your favorite online tool for building Flatfile?
Favorite online tool for building Flatfile?
Or you can't say ClickUp either.
I was going to shoot for that.
Yeah.
No. It's interesting. Our team relies heavily on GitHub for just everything from discussions through, like, you think of GitHub as source code, but like our engineering team lives there. We ideate there. We've been able to take an enormous advantage of that and like avoid just getting thousands of different tools out there. So I think it's interesting. I was trying to think about that answer because I think there's a lot of utilities that really have helped us grow, but like GitHub is where we spend the vast majority of our time.
Makes sense. What about health? How many hours of sleep are you getting every night?
Oh, gonna press me on this. None. None health. None sleep.
Yeah,
That's one area that is just not. I don't know. Maybe someday.
What do you think though? 5, 6, 7 hours?
I try to shoot for more than 5 hours if I can, and that's generally where like my body like is able to get a good rest, and I don't crash later in the day. So,
and David, what situation? Married, single, kids?
Married, no kids.
No kids yet. All right. Last question. How old are you?
I am 33.
And take us home. Something you wish you knew back when you were 20.
I wish I knew that you can let go of things sooner than you want to with very few repercussions. I was like a bull, like a dog with a bone with like my first startup. I went 3 years too long with that. I like ground myself to the ground trying to make something that wasn't going to work.
David, how old were you when you did that, those 3 years?
I was in my early 20s.
Yeah. Interesting. And you stuck with it. Were you funded or bootstrapped back then?
I was bootstrapping with my own money, the money I lost. But it was interesting. I got advice along the way, like, hey, like the signal is here. You really need to let this go. Like if it was going to be the growth, thing you thought it was going to be, you would see signal for that. And founders with the boundless optimism, right? Like you just keep trying so many times. And I think this led to a more conservative approach with launching Flatfile, where I really wanted to see that business prove itself out. I wanted to act more like an investor going to my own business and going, is this proving what it needs to prove to me to like take more of my time? And I think that's changed the way I think about Flatfile, just more judicious and just approaching it more like a fiduciary responsibility as a CEO to make sure the business grows and grows well, and we have enough capital to keep it doing that.
Would you agree with this? This is the biggest thing I regret from my 20 to 25-year-old self. I was stuck in a SaaS company that was flat at $1 million. I'd raised some VC. I thought I had to keep plugging away for years to like make them their money back, when I really should just shut it down, taken a small win, and gone and done my next thing. I wish I saved 3 years to do that. Sounds like you have the same sort of pattern.
Yeah, absolutely.
Yeah. Guys, well, there you have it. Speaking of shutting things down early, he launches little SDK because he was frustrated about writing manual CSV importers. He goes back to his full-time gig, comes back, and he's got 100 downloads, 20 installs, and over 20,000 sort of activated onboardings through the tool, and says, wow, I should launch Flatfile. This is back in 2018, 2019. Fast forward to 2020, they break $1 million in revenue. Fast forward to last year, they break $4 million in revenue, on track to double that this year. He won't comment on today's revenue, but feeling pretty good about it. Changing his position from, again, CAC payback period of maybe 24 months to get more healthy from a unit economic perspective. Sounds like he's doing it, but he also underlined the fact that creating a new category is very expensive, which is what he's going to use some of the additional $50 million he just raised today in his Series B for, as he looks to continue to scale Flatfile with his team of 80. David, thanks for taking us to the top.
Absolutely. Have a good one.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers. They try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company, or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them, and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.